China's economy grew 6.9% in the first quarter compared to the first 3 months of last year, beating many economists' expectations. With more on this and other news in East Asia, we turn to our Ro Aram. Aram, the figure suggests that growth is stabilizing in the world's second largest economy. Could you run us through what may have helped this boost in GDP?
Well, Jihye, the rise is mainly thanks to increased infrastructure spending by the government and demand for new property. Now, Chinese exports have also grown in Yuan terms, all of which, as you mentioned, are showing signs of a steady development in the country. Although you have to err on the side of caution when it comes to reading Beijing's official figures, there has been a frenzied house market that has led to government spending more to accommodate that. The growth was well above China's full-year target of 6.5%, which was cut from 6.7% last year. In monetary terms, China's Q1 GDP amounts to just over $2.6 trillion. Data from the National Bureau of Statistics also shows that domestic consumption had picked up early this year, helped by a surge in retail sales. However, China's economy still relies heavily on massive state investments as projects, despite Beijing's efforts to reduce the dependence of the state when it comes to the country's growth. There's also a constant thorn that is hindering China's growth from accelerating further, and that is debt. China's total and private debt is reported to be worth more than 250% of GDP. Despite the better-than-expected economic data, the Shanghai Composite closed 0.7% lower on Monday over an escalating regulatory crackdown on stock manipulation.